In the world of finance and investing, few books have garnered as much respect and admiration as The Intelligent Investor by Benjamin Graham. First published in 1949, this seminal work has been the foundation for countless successful investors, including the legendary Warren Buffett. In this review, we'll delve into the key concepts presented in the book, its lasting impact, and why it remains a must-read for anyone serious about investing. Background and context. Benjamin Graham, often referred to as the father of value investing, was a renowned economist, professor, and investor. His investment philosophy was rooted in the idea of purchasing stocks at a price below their intrinsic value and holding them until the market recognized their true worth. The Intelligent Investor is a distillation of Graham's years of experience and wisdom in the stock market. Key concepts, Mr. Market. One of the most famous allegories in the book is that of Mr. Market. Graham uses this character to depict the stock market's irrationality. Mr. Market offers to buy or sell shares at different prices each day, often influenced by unfounded optimism or fear. The Intelligent Investor understands that Mr. Market's prices are there to serve them, not to instruct them. They can choose to ignore him or take advantage of his erratic behavior. Margin of safety. This is perhaps the cornerstone of Graham's investment philosophy. He argues that one should only invest in a stock when there's a significant difference between its market price and its intrinsic value. This difference, termed the margin of safety, protects the investor from unforeseen events or miscalculations. Defensive versus enterprising investor, Graham categorizes investors into two types. The defensive or passive investor aims to protect their principal and earn a decent return. The enterprising or active investor is willing to dedicate more time and effort to find undervalued stocks. Graham provides distinct strategies for both types. Diversification. Graham emphasizes the importance of diversifying one's portfolio to mitigate risks. He suggests that even the defensive investor should have a split between high-grade bonds and diversified stocks. Intrinsic value. Throughout the book, Graham stresses the importance of determining a company's intrinsic value, which is its true worth based on fundamentals, rather than relying on its current market price. Lasting impact. The Intelligent Investor has left an indelible mark on the world of investing. Its principles of value investing, understanding market psychology, and the importance of a margin of safety have become tenets of sound investment strategy. Warren Buffett, a student of Graham, once said, "By far the best book on investing ever written about the Intelligent Investor." Critique. While the book is a treasure trove of wisdom, some critics argue that its principles are too conservative for today's fast-paced market. They believe that in the age of technology and rapid information flow, value investing might not yield the same results as before. However, many of its core principles, like the margin of safety and understanding market psychology, remain timeless. The Intelligent Investor is not just a book. It's a guide to the mindset required for successful investing. Benjamin Graham's wisdom transcends time, making it as relevant today as it was when first published. Whether you're a novice investor or a seasoned professional, this book offers invaluable insights into the art of investing. Its emphasis on rationality, discipline, and a long-term perspective makes it a must-read for anyone looking to navigate the tumultuous waters of the stock market. In an age where algorithmic trading and high-frequency trading dominate the headlines, one might wonder about the relevance of a book written over 7 decades ago. However, the principles laid out in The Intelligent Investor are more pertinent than ever. In a world of instant gratification and short-term thinking, Graham's emphasis on patience, discipline, and long-term vision offers a refreshing perspective. Adapting Graham's principles in the digital age. While the tools and platforms available to investors have evolved, the fundamental principles of investing remain unchanged. Here's how one can adapt Graham's teachings in today's digital age. Embrace technology, but stay grounded. Modern tools like robo-advisors and AI-driven analytics can help in making informed decisions. However, it's essential to remember Graham's teachings about not being swayed by market sentiments. Use technology as an aid, not a crutch. Continuous learning. The financial landscape is ever evolving. While the intelligent investor provides a strong foundation, it's crucial to stay updated with current market trends, emerging sectors, and global economic shifts. Ethical investing. One area where modern investors can expand upon Graham's teachings is in the realm of ethical or sustainer.